afternoon. Welcome to the fourth in our series of webinars highlighting the successes and challenges that industry faces in commercializing nanotechnology. Today's webinar is focused on an important component of commercialization, insurance. I'm Mike Metter, the Director of the National Nanotechnology Coordination Office, the Coordination Office for the U.S. National Nanotechnology Initiative. Before we get started, I wanted to highlight a few activities related to the National Nanotechnology Initiative. Links to these activities can be found on our website, nano.gov. The first is that we have a draft of the update of the NNI Strategic Plan is available for comment, public comment. The comment period opened on September 12th and will be, formally closes on Friday, but we'll actually keep it open throughout the weekend. This update will set the course of the NNI for at least the next 3 years, and we're really excited about and very interested in getting public comment on this important document. The second thing I'd like to tell you about is that on October 9th, a number of professional societies and universities, together with federal agencies and national labs, are sponsoring education and outreach activities related to the first ever National Nanotechnology Day. National Nanotechnology Day is a community-driven opportunity to inform people about nanotechnology, what it is, how it has found its way into our commercial products that have enhanced our lives, and what the future holds. One fun thing that the NNCO is doing is we're sponsoring a 100 billion nanometer dash. That's a 100-meter dash, in case you can't do the math. And we invite you to take part in this and to take a video of it and post it on our Twitter site, hashtag National Nano Day. And also check out nano.gov to find out the activities that are going on around the country on October 9th and throughout the month of October related to national nanotechnology. So, okay, enough of the commercials. We're here today to discuss the issues and challenges related to insuring and underwriting nanotechnology and other emerging technologies. Investments by the federal government under the National Nanotechnology Initiative now total over $23 billion. Together with industry, and these investments together with industry have resulted in significant progress in taking nanotechnology discoveries out of the lab and into commercial products. Nanotechnology can now be found in high-definition televisions and displays, clothing, sporting goods, and automobiles, just to name a few applications. Nanotechnology has become a global enterprise. A recent study by Lux Research Corporation estimates that revenues from nanotechnology-enabled products globally grew from $339 billion in 2010 to $1.6 trillion in 2014, and they're expected to reach $3.7 trillion by 2018. Revenues in the U.S. grew from about $109 billion in 2010 to $370 billion in 2014. So nanotechnology has definitely made its way into the marketplace. But the ability to insure products and businesses is essential to commerce and the continued success of this nascent nanotechnology industry. And that's why we decided to focus on this topic for today's webinar. So we have together here today a panel of leading experts to discuss this topic. To my right is Dr. Christie Sayes, who's an assistant professor, or excuse me, an associate, I demoted you, an associate professor of environmental science and toxicology at Baylor. To her right is Mr. Alan Gelwick, who is the Executive Vice President of the Lockton Companies. To my left is Madhu Nutaki, who is the Digital Chief Technology Officer, Innovation and Mobile Delivery at AIG. And to his left is David Swatzell, who is the Managing Partner at Knowtional, a management consulting firm. So what I'd like to do is to start off is ask each one of the panelists to say a little bit about themselves and their relationship with nanotechnology and insurance. And we'll start with you, Alan.
All right. I'm Alan Gelwick. I've been involved or studying the nanotechnology space for approximately the last decade. I am an insurance person. My day job is as a broker arranging coverages on behalf of clients and working with the entire universe of insurance carriers. I've been in this business for 33 years. I started in Manhattan down on 100 William Street with a company called Chubb. But today I work for Lockton Companies, and I live in Houston.
My name is Christie Sayes. I'm an associate professor at Baylor University. There I conduct research, I communicate science, and I educate graduate students and undergraduate students in the field of toxicology, environmental health, and nanotechnology. I've been working in the field as a researcher for almost 15 years. I publish papers for the peer-reviewed literature, and I collaborate with a number of folks along the space of nanoinformatics and asking the questions, what are the most relevant EHS, environmental health and safety questions needed to be able to move the technology further.
Thank you. My name is Madan Utake. I work for AIG, one of the largest insurers in the world. In my role as the CTO for the digital functions, I try to make the bridge between kind of the insurance side of the world and the technology side of the world. And Nano is a good place for us to kind of look at that merging, and that's why I'm here today to share some of the thoughts from the AIG standpoint, both on the product side but also on the technology side.
My name is David Swatzell. I'm the managing partner of Knowtional, which is a Dallas-based management consultancy. My background is in software engineering and business strategy. I've been very fortunate to play strategy roles and also software engineering roles at major corporations such as Compaq Computer Corporation and more recently Hewlett-Packard. My interest is really around the convergence of technology and business, and this is absolutely a greenfield opportunity, and I am working with Lockton as well as other business partners in trying to leverage technology to comprehend and support this particular nano space.
I also wanted to mention that we're here at the New York City offices of Lockton Companies. I wanted to thank Lockton and Alan Gelwick and his staff for hosting us and for their hospitality and help setting this up.
Thank you.
So let's get started. This first question is for Alan and Madhu. What is the current industry practice for underwriting technology, nanotechnology?
Maybe we'll start it from the inbound place. So I work with clients, and I am part of a global organization and know how the rest of our organization sees this space. And today, it's very business as usual. For the most part, our Accord forms, which is the most popular industry form in the United States for completing an application for insurance, do not include any nano-specific questions. So in the absence of taking an application where you actually specify to an insurance carrier that you are in the nano business, you're likely to follow the more industry normal application. And in this regard, everything is the same from an underwriting standpoint.
Yeah, and let me add to it in this way. I think when you think about nano, I think we immediately think about innovation kind of in the same breath. And whenever it comes to innovation and emerging technologies, insurance is always cautious in terms of how we approach it. So AIG is one of the companies that underwrites nano in that space. However, I think if I use an analogy to kind of make this more clear, so self-driving cars, I'll ask my panel, how many of you are willing to sit in the back seat of a self-driving car if it's on 6th Avenue tonight? Of the four of you.
Not today.
Not today, exactly. But Uber has released the self-driving taxis just a week ago in Pittsburgh, and they're making inroads into it, right? But however, I think we need to look at the ecosystem of all the things that need to happen before, just as you said, you sit in the backseat of the car. Yeah. You need to address the legal stuff, you need to address the regulatory, you need to insurance, you need to address the data requirements. And all of that stuff needs to always happen whenever you come up with a new technology that people want to adopt to. Self-driving cars is a good example because it accelerates so fast. I think nano is going to be in the similar boat soon enough. So the idea is that will we have a nano dream or will we have a nano disaster, right? And I think that's the question that we as an insurance company are starting to think about, and not many people are in the insurance space looking at it. I think we're the first ones to start to look at, and hoping that as part of this webinar and other things like this, the industry starts to adopt that attitude a little bit more aggressively.
I mean, one follow-up is that, in fact, so I have attended a number of nano-related industry events, and what I've learned is that most of the nano producers have decided to, in many cases, take the term nano out of their business name, so as not to create, so the insurance carriers don't immediately recognize the business as a nano business.
Right, yeah. So are there any exclusions right now, or policy stipulations that exclude nanotechnology?
There are no nano exclusions in commercial insurance. There was one example of an insurance carrier, Continental, several years ago, but that has not been adopted around the world. So today, the contracts of insurance that exist do not include nano-specific exclusions. However, they may include exclusions that may nevertheless exclude nano-related exposures.
Yeah. Like the pollution exclusion or?
Pollution exclusion,
Right.
pre-existing knowledge, claim triggers. There's a lot of potential, I'll call them gotchas, in an insurance contract. So the lack of affirmative coverage is a concern to me as a person that represents clients.
Very well said. I think this is an area where there are known unknowns and there are unknown unknowns kind of a thing, to paraphrase that phrase.
Yes.
And I think this is a perfect area where that lack of knowledge is a good and a bad thing, right?
Yeah.
So looking at it from the insurance standpoint, you can weigh the balance between the two. But to Alan's point, I think nobody actually knows what's going on in this space because nothing is flagged yet. Right?
So this is for, I guess, three analysts here, but two. Are nanotechnology applications insurable throughout the product life cycle, from materials development to productization to manufacturing to use and disposal?
I think it's a great follow-up from the previous question and what Alan and Madhu just mentioned about is the product a nano product, first of all, and then is it okay, legit, for a company to remove the word nano from their advertisements and their marketing of the particular product? And that gets into not only a philosophical question, but also a scientific question. The good news is on the science side of things, we have come a long way and have great tools to be able to measure the nano component within a final product. And we can potentially, now that the literature and other, the scientific literature as well as other product spec sheets, we can make a determination as to how risky the particular product is based on the characteristics of the individual nano object in that particular product. So just by example, if you're talking about a colloidal solution, that would be some nanoparticles suspended in an aqueous or some other solvent phase. That's a very different type of product than if we're talking about the tennis rackets that have the coating of the carbon nanotube mesh or carbon fiber mesh either in the weave or in the handle itself. So those are two different examples.
As it relates to, I think the answer is I'm not able to probably follow the chain of custody in nanomaterials today because I don't have the data.
Right.
But the possibility exists. And it might be important as well. These nanomaterials, even small quantities, can be worth more than gold, a lot more than gold. So I think, you may start from a single nanomaterial that ultimately is integrated into a product,
Right.
and throughout its chain of custody, it may have different risk profiles. Right? But I do think that because nanomaterials, when they can go wrong, may not look like a broken arm, it may look more like cancer or a disease because of what it's doing to your body, that suggests that the claim profile is not going to be an incident that it happens at a specific time. It would rather be a gradual incident over time. And risk classes like this are sometimes better written not on what we call an occurrence form, but maybe rather better suited for what we call a claims made form of coverage trigger, which would allow you to, from the date of the inception of this material, potentially with a chain of custody ability to track that material through its life cycle and insure it, although at different risk profiles, throughout the entire life cycle. It's possible, but not today.
And there will be different risk profiles too, depending on that value chain or product life. Towards the beginning, maybe it's more of an occupational type of exposure, and towards the end, it's more of a consumer-based or environmental.
Yeah.
So eventually when we can talk about what the EHS community can do to help support the insurance industry, just know that toxicologists, for instance, as well as exposure analysts and risk assessors are all very much aware of moving more from acute exposures to chronic exposures and collecting those data, not in isolation of just one exposure at one time period, but exposure over a longer time period, and then what are those effects 2 years later, and how to extrapolate those into the future. David?
So both of you have said data a couple of different times. So obviously a critical path item is having the data.
Yes.
Right?
Yes.
So which I think suggests that, number one, there has to be a willingness on the part of those producers to be able to reveal or surface that information and have some standardized way in which that information is cataloged and then used by the industry. And then secondly, there's dynamics that happen within the industry. You mentioned chain of custody as being one of those, in understanding the movement or the transportation or the logistics associated with the material, and then having that data and that insight as well. And there's other forms of data and content that are also going to be, I think, meaningful in this to address the insurability piece of it, right?
I think one way to look at this also is that insurance is a look-back industry in the sense that we always look at the historical data to figure out what the future looks like. Yeah. And in this space, we just don't have the data, as you said, right? So for us to understand how the risks are going to come out in the future, we just don't have any analog to it kind of from that standpoint. Yeah. So whenever you think about kind of nano in the emerging space, I think that's the constraint we have to work with. So the more people that understand this thing and the more people that understand the chain of command or the chain of custody rather, and the more data that people are willing to share, I think we'll all become more savvier about it on how we approach it.
And more predictive as well.
Exactly.
Well, there was an article in Nature Nanotechnology in 2013 by an Irish group that recommended that for managing risk in nanotechnology, and in particular insurance, that you consider things like control banding.
Yeah.
Is that?
Well, I've worked with the group, and I think it's an excellent start in terms of establishing basic different categories. I mean, a single-wall carbon nanotube with a nice sharp pointy end on the end of it, we now know is rather dangerous. Whereas, and it also has a lot to do with, the environment that it's in. So I think risk banding is an excellent first step. And it is being adopted. There are a number of insurance carriers that are looking at that. They simply need the data to be able to do this efficiently.
The good news with the insurance industry moving or suggesting maybe using the risk banding is that this is a great example of the convergence of the fields that we're all working in the sense that even EHS professionals, when we collect data, there's a movement. I'm not saying we're more comfortable doing it this way, but there certainly is a movement to divide up the risk into exposure banding and hazard banding. For an EHS professional, we often think of risk in the scientific sense of a function of both multiplying the rate of exposure or the incidence of exposure, those rates, times what the hazard might be. And most of the time our experimental designs are laid out in such a way that we collect empirical data, just a single number from a particular exposure, from a particular dose, looking at a particular endpoint. But as we move forward in our technology, I believe that the EHS professionals have heard these cries, and we are comfortable in the sense that we can collect data in more of a banding type of way, either over orders of magnitude or even smaller bands as that, and to be able to include different extremes of different types of populations if needed.
Okay. So since we're talking about EHS, what more can the environmental health and safety community do to help the insurance industry in sort of minimizing the risk and ensuring nano?
I'll start. I think they currently are the sole source of data because we're not otherwise generally getting the data. There are some in industry that are sharing, and there are some in science that are sharing, and of great significance, we're here today because the government is talking about helping us and industry receive access to data. The over $20 billion worth of research would be an excellent start for data to support this discussion.
It's a question of where the data is. A couple of us have said that there's little data, and I would agree that compared to other industries historically, we probably have smaller data sets than in the past. This is now the opportunity for us to look at emerging technologies, not just nanotechnology, but any additional emerging technologies where the performance of that technology is going to go faster and faster and make it to the market a lot sooner before we have all of the EHS data that we need in order to make regulatory decisions. Nanotechnology provides wonderful opportunities for a lot of us, but it's really one of the first places here in modern history where we're going to have to think about how to do more with little. We do it anyway with different resources that have available financially, and for this industry we need to do more with little as well. So the question is, apologize for being long-winded, but the answer is we do have the data. The data is stored on individual people's, researchers' computers, and David, we have to come up with ways, methods that we can take empirical data that are stored on individual computers and take that numerical data and store it or compile it or sort it in such a way that makes sense.
I think it's a great point. I think there's actually two things. One is the acquisition of the content and the assimilation of that into a form factor that now allows for it to be leveraged in a capacity that obviously the industry needs, the insurance providers need. There's other use cases as well that need to be supported through this. So one challenge is to basically go and capture that information in as near real time as possible, right? Because there's a time value associated with information. The second issue, though, you mentioned little, and which obviously leads me to the notion of big data. There's so much hype in the industry around big data, and I think it's the wrong terminology, to be honest with you, with respect to this. This isn't about big data. It is about precise, relevant data, is really what it's about, which means that you may have very large data sets, you may not have large data sets. It really doesn't matter about the size of the data set. It's more important that it's pertinent, it's precise, high veracity, and relevant.
Relevant, yes.
So, and then there's plenty of analytics tools and platforms out there that allow folks to then yield insight into that data and what that basically means, what the patterns are, so on and so forth. So, to me, it's a dual challenge.
Yeah. And just to add to that, then I think when you think about kind of the insurance life cycle, is the original question, there's the underwriting piece of it, and then there's the analytical model that drives the underwriting. Right? And just as you said, I think on the underwriting side, you want to have insights that are able to then get converted into, okay, with this much risk, this is the premium I want to kind of accord to it, right? So I think that's the part that we need to get to, using data technologies that are more emerging now than before. Right. And then analytical modeling side, just as you said, there is data available.
Sure.
The trick is to figure out how do you convert that into a model that's actually usable.
Yes, of course.
Right, and that becomes more predictive and things of that nature. So I think this is where technology can be a friend for us as we start to look at these two things and how do you make that surface back to the underwriter that just wants to know how much risk is it and how much am I going to accord premium to it.
Right.
Well, yeah, and so to that final build on this is, from my perspective, or my vantage point, this is very much a fragmented industry.
Yes.
Right? So the only way that you can contend with the fragmentation is through the technology.
Yeah.
Right?
Absolutely.
The big challenge is that these technology literally can represent billions of dollars of potential value, and people are very, very focused on protecting that value. So sharing data becomes intrinsically difficult.
Right.
And then the other thing, I guess, that's really struck me from the insurance standpoint is if we were operating in Europe, which we do and AIG does, there the legal system forces people that are producing materials into a regulatory process where we're going to get data. We're going to get a chance to determine the environmental impacts. In the United States, while these regulations are coming, and you can, I know, give us an update, largely you get a license to do whatever you want to do here. We have a legal system that will be quite punitive if you do things wrong, but we genuinely have the license to do things, which means that things are happening before anybody gets to evaluate these things. So of all the materials that are being created during this call today, which may be a lot of them, none of them will likely be characterized. In fact, most of the materials that have been characterized or that have been produced to date, very few of them have been characterized as it relates to human environment. They may have been characterized from a performance standpoint, but not beyond that.
This is all tempered against volumes. So in the United States, we're, especially in the current regulation, we're still leaning on in the nanotechnology industry of it depends on how much volume of that material you're going to make, how much you will import or export. And we've been saying this for 15 years that with nanomaterial synthesis, we don't need as much bulk material when we're going to use that particular material in some enabling technology. So a lot of the times we're here under this regulatory environment and this, again, scientific and philosophical question of, for nanomaterials, does the volume, what is defined as mass-produced, and what is that lower limit of volume that we need to produce in order to think about collecting more detailed environmental data, human health data, ecological data, and physical and chemical property information? Do we need to lower that?
Yeah. So for in my experience with databases,
yes,
has been that it's oftentimes difficult to get people to want to put their data into a database.
Of course.
And I think that that's particularly true with nanotechnology. You have, in some cases, it's just the inertia of getting a scientist to enter their data into the database. In another case, maybe a company unwilling to do it because they'll reveal something that's proprietary.
Right.
So what can we do to encourage that? And then so now then the other side of the coin, and David, you talked about this, is the veracity of the data, right?
Correct.
I mean, how can we make sure that the data that goes into that database has been collected properly with the right techniques and things like that?
You're looking at me, so
Yeah.
I don't have the answer to these questions, but I will, as a researcher, I will say that my data it doesn't define me, of course, but it is the product of the fruits of my labor. And I'm very close to my data. As a scientist, I really personify my data. It's good today, but it's also an investment in my future because I can go back to that data and pull out nuances and have different research ideas or different intellectual property that can be pulled from that same data set. So from that point of view, in my mindset, the last thing I would want to do, like you say, is post the raw data out there publicly in the sense that it's not, the view, it may not be mine any longer. That could go into my way of thinking when I think about posting that data. So I don't have an answer for you, but that's the way that I personally think of my data.
Yeah, and I don't have an answer either, although I think there's some interesting things. Number one, you mentioned that the veracity of the data is representative of you from a qualitative standpoint. That's the way I interpret it.
Sure.
Right? So, and my guess is all researchers are very much like that, right? They want to get it right. They want that. So now we have a couple of different dilemmas that we have to deal with, one of which is from a veracity standpoint, can we employ other technology that wasn't available 10 years ago, 20 years ago in the form of machine learning and artificial intelligence to basically make sense of data that has been entered and managed? The second thing is that we have a normalization issue. That's a data term, right? Because the way in which you represent content in your system is different than the way some other researcher may also represent the same data in their system. Therefore, there's tools and techniques, automation technology that's available that allows for the probing and the capture of that information, a reconciliation between columns of data that you normally would find in a database structure, and then basically bringing those together into a normalized data structure. So those tools are available. They're basically advanced ETL technologies, if you will. But the real thing I think that's interesting here is the bifurcation of structured versus unstructured data. because many of the nuggets that the insurance industry as well as other folks will be looking for, they're going to be buried in unstructured documents that now all of a sudden, instead of having a nice, well-behaved database record of content, we need to go search, and we need to basically be able to probe and extract that content and those insights from those documents or from those artifacts. The good news here is that there's tremendous technology that's available. There's semantic search and contextual search technologies based on latent semantic analysis and other techniques that allow for a very contextual understanding of what's embedded in those unstructured documents that now can either be turned into structured data or be used in terms of an application in business logic. So the good news is that, and we used this word convergence a little bit earlier, there's now a convergence of machine learning, AI, latent semantic analysis type of technologies that are coming to the forefront that basically, I think, help prompt the support to the industry. So,
yeah. Adding to it, I think when we look at data, I think producers and consumers. And if you listen to Bain's of the world or McKinsey's of the world, by 2020, everything that can be measured will be measured or something along those lines.
Right.
So let's assume that at least some of that is true, right? So we'll have more data than we can do something with, right? So I think IoT and the sensors and all of that's coming in, paired up with the search that you're mentioning, David, I think is a powerful mechanism. On the flip side to it, I think the consumers of the data, I think as we have evolved into a sharing economy in general, I think the constraints that we, at least me as a generation, used to have around sharing my data is very different than what my two high school kids want to do, right? They're more open about what data to share, what they're willing to give up in return for something, right? So I think that's where this equation becomes a little bit more different in this economy is, hey, what can I share out so that I can get back from it? Be it a researcher, be it an insurance carrier, be it a technologist. I think that's the nuance that we have to start to think about when you get into nano is, if we're going into a newer economy where the affordability of data is that much more easier, and what can we do with that upcoming deluge of data that's going to happen?
Absolutely. I mean, breaking down the barriers by using incentives
Yes, right.
is absolutely scientists will be, and maybe more likely for next generation of scientists, but it will be part of the way we do business of science. You mentioned the word, David, context, and in the Internet of Things, absolutely there's context of the quality of that data moving from in isolation into a larger compilation of data. But within that study itself, I have to speak for scientists to say that when we have raw data within one particular study, we have to be able to preserve that continuity and the context in which that raw data was conducted within that one experimental design. And so when you overlay one individual data set from one study and you try to merge it with data from another study, if those experimental designs were different, then those data may not make sense, and maybe they should not be merged together.
Absolutely, or merged together, but the intelligence is built within the system to understand that contextually they are different.
Absolutely.
Therefore, right.
This is wonderful conversation. You have definitions for context, and I have definitions of context, and part of this is the growing need for, we always do this exercise of terminology and glossaries, but to continue to do this between scientists and insurance professionals is important.
Yeah. So we've got the data set now, right? And in today's world, with all the stuff that's going on with hacking emails and things like that, how can we make sure that we protect the data so that people don't tamper with it or delete it?
It's a great question, and it's on the forefront, I think, of everybody's mind. It doesn't matter which industry we're talking about. So there's, I think, two dimensions to this. One is the prevention of access from folks that obviously you don't want to have access to, and the other that they shouldn't have access to. And then the second thing is, how do you develop some policy framework that allows now for those who do want to share
Yes.
to be able to clearly articulate who the data can be shared with, at what points in time, what specific elements of data or content or corpus of content now can be shared. So it's a very, very broad issue. And so I think our belief is that there is a combination of technologies that have to converge, I'll use that word again, in a very, very different cybersecurity type of framework. So if you look at cybersecurity today, you see very classical models, blacklist, whitelist type of technologies that are out there. And that's fine for what they need to do, but they're inadequate in terms of providing the ultimate level of security associated with content. So what we're seeing is an emergence of new cybersecurity frameworks that are really behaviorally based.
Mm.
And what that actually means is that if I know that Dr. Christie Sayes has this particular role and occupancy within a business or an enterprise or a university, then there are certain parameters and rules and guardrails around the behaviors that are acceptable for an individual in that role. And not only is there security that's based on that, but there's also machine learning that goes on. I'll use that term again, machine learning that goes on to understand those behavioral patterns and be able to either allow access or exempt access to that data. So those types of frameworks, which I think now get instantiated in silicon as well as software policy management, and this is a different policy management, not an insurance policy management, but cybersecurity policy management, are going to be absolutely critical. So that's where we see the evolution of these technologies going, and it's absolutely critical that they get employed within this nano database, nano content world.
Yeah, I mean, I think this is a primary issue,
yeah.
A barrier if not understood, because again, it's back to, in fact, if we were able to aggregate all the data into single ontology that would be searchable of structured and unstructured data, somebody should raise their hand and say, how do we protect that?
Yes.
Yeah.
Well, and to build on what you just said, we're going to have different use cases, right? Because I could envision that let's pick a chemical company, may want to share some insight and content in the public domain, but there's going to be content that they're going to want to keep behind their firewall within their own organization. And so there's going to be different use cases for the sharing of information and then the selection of the individuals or the entities in which you're going to want to share that information with. Maybe it's prompted by regulatory compliance, who knows, but the model has to be able to support any and all of those different use cases. And the data may be deployed as well, not in a single corpus of a database structure. It is going to be fragmented, right? It will be distributed. And so some may be in the cloud, some may be in a data structure within the organization. And it's being able to combine all those things virtually versus physically that's going to be important.
Yeah, I'll pass that.
Okay. So let's move on from that a little bit and talk about a couple of other things. Has the industry considered sharing risk assessment tools and exposure protocols, or are these tools proprietary? I'll ask you to insurance guys.
So to start out, I'll add.
So in my, I mean, AIG is doing research, Swiss Re is doing research, Allianz does research, Munich Re does research, Gen Re does great research, Zurich's implemented some good things. I'm not aware of a lot of collaboration and sharing at this point. Chubb would be in there as well. Certainly the insurance industry has had a number of meetings and forums to create a mechanism, to create some sharing of knowledge. But in terms of what happens after those meetings, I believe all of us go back to our respective firms and create our own tools at this stage.
Yeah, I'd say the same thing. I think this is probably an area where collaboration and competition have to merge somehow or converge, to use your word. But it hasn't happened as actively as I think many of us would like it to. And some of it is, as you said, data that we don't want to share as an enterprise, but there are ways to even share that insight out, right? I think we have to be more sophisticated than where we are today in saying that, hey, I don't want to share anything, to, hey, I'm willing to share this piece of it, this insight. Yes, I don't want to share the raw data yet. But I think a consortium view of that doesn't exist today.
Yeah.
I think maybe webinars like this or through the government is kind of, you can force that conversation to happen, and hopefully that will trigger more of that collaboration, competition kind of thing to come together.
I mean, it would seem to me that in these areas where you are looking at emerging technologies, where you're confronted with the lack of data, where you really don't have the history that you can use to base your insurance.
Exactly.
This might be a good opportunity to do something.
I mean, one thing that we do collaborate on a little bit is, we almost all use this industry group called Accord to get almost all of our critical data. So that would be at least a possible place to explore further conversations. And certainly if the industry is behind that, it might be a more robust conversation.
Yeah.
Yeah. And it is a matter of shared risk also. It's just like AIG, Swiss Re, or others too are in the same boat in terms of understanding the risk. So I think it's the benefit of everybody to actually increase the knowledge level in this space. We'll all benefit from it. It's not just the AIG benefits, but everybody will.
Yeah. So we talked about what the EHS community can do to help the insurance industry out. But if I'm starting up a nanotechnology company, what can I do? What can those people in the nanotechnology industry, those that are making nanotechnology-enabled products, what could they do that would help to reduce risk and give a greater comfort level to the insurance companies?
I can start. I'll quote Mark Anderson for a minute on this one. So he said the output of a soup company is soup.
Yeah.
Output of a technology company is innovation. I think we're in the generation where those things are merging together. Every company is a technology company now, right? I love the GE ads that come out. We are a digital company, but we're also an industrial company, right?
Yeah.
So I think the answer to that is, as you look at kind of somebody becoming an entrepreneur in this space, I think they have to start to think about material science. They have to start to think about the EHS perspectives, but they also have to start to think about how can technology help them and also grow the industry kind of from that standpoint. So if I'm an entrepreneur, I need to make sure that I am balancing kind of the domain expertise with the technology expertise together and to become, to bring a product to the market would be my way to answer it. Dave?
I'd just like to say that, for the way that EHS training, education and training and the degrees in which students are in the knowledge in which they are gaining through their education, a lot more of these students nowadays are interdisciplinarily trained.
Yep.
There's many programs out there where an EHS professional is trained in such a way that they can understand the entrepreneurial spirit, or they might have the entrepreneurial spirit themselves, and they're very much aware of the jargon and the issues surrounding new and emerging enabling technologies. For small to medium-sized enterprises or maybe a startup company, I would invite them to really consider looking when they hire their first set of team to look for an EHS professional who is interdisciplinarily trained, so that they can understand what's going on the regulatory front, as well as the health and safety, as well as contribute to sustainability within the company from day one.
So I think this is it's a good question. If I was going into business as a nano producer, my ability to want to do the right thing is going to be somewhat connected to the amount of capital that I have to do the right thing. And I think that's a challenge, and I think that's something we have to talk about, is that AIG has a subsidiary in Lexington that offers a a nano-specific policy. It costs, in real dollars, it's not by true insurance standards a lot of money, but it is close to, let's say, $10,000 for this type of coverage for a general liability policy, when they could buy perhaps the same policy by taking the word nano out of their name.
Right.
They can buy the $5,000 policy. The investor has no affirmation of coverage. The entrepreneur may have forgotten that one day they will want to exit this business. And one day an attorney may say, you know, we can't buy this business. Okay?
Yeah.
So that might be something that an entrepreneur should think about. I think all entrepreneurs should think about their exits when they start their businesses. But the other challenge in this space is large companies. A large Fortune 500, Fortune 1000 company that takes any significant deductibles may find that they're essentially self-insuring this risk. Okay, and in the area of this space, if you had a business that had a lot of workers working in this space, potentially with materials that could create health issues, then while on these large accounts many years ago we stopped seeing the economic reason to buy aggregate stop loss coverage, we might want to reconsider that, because in the absence of that, an infinite amount of claims that could occur, and all you have to do is look at the asbestosis events to see why you might want to rethink that approach.
Right.
Well, I think it's a real struggle.
So what I've just heard from all of you is there's a grand opportunity to collectively write a book, New Nano Business for Dummies. Is that it?
Sponsored by NSU.
Yeah. So you talk about asbestosis. Do we think that, what happens if there is a major insured nano-related claim? Do we know enough now? Is the industry, have enough knowledge to really be able to handle the claim in such a way that it's not going to...
This is the question that keeps me up at night. This is the question that I think there's the largest disconnect between those that are in the insurance business and those that are not. Is the perception that insurance is a given.
Right.
It's an automatic.
Right.
It actually, most of us have shareholders, stakeholders, and we owe a duty to provide a return to those organizations, and therefore we actually have to underwrite to a profit.
Right.
So the consequence of a major event, if it were to happen, would most likely create a radical and very prompt and quick response from the industry that would not be healthy for the industry's sustainability.
Yeah.
Which is so. Because of that question and my concern, it's so relevant to figure out what we can do sooner than later to try to get insurance so we have more information. The truth is, if we have a major claim and insurance has risk banding, and we know that, that major claim occurred in the space that we exactly predicted it would occur.
Right.
Right.
All the other risks are fine.
Right.
That's probably not an issue.
Right. But what if it occurs in the...
If it occurs when we don't have, this type of understanding, I think we have a lot of risk.
Yeah, I couldn't add more to it. Very well said.
So, what else can industry do, can government do together perhaps to try to deal with this business of insuring and underwriting emerging technology?
Well, one of the things that, a little history, is that we were together in London a year ago and had the privilege of having additional insurance companies, including one of the oldest, Lloyd's of London, XL Catlin, Navigators and such, participate in this. And the good news for me is that you're the first governmental official that's actually recognized that in the absence of this discussion, in the absence of more collaboration and sharing of information, the very thing that we must protect, which is this, nanotechnology is coming up with solutions every day that will make our world a better place.
Absolutely.
We want to be able to sustain this. It also is a tremendous opportunity for this country. So I think really the key step here is to figure out, if we can't get all the data we want, where can we start to get some data?
Right.
And I would start with the $20 billion plus research budget that we've done over the past decade. And is that possible to access?
Yeah. Financial resources are going to be very important in moving forward, as it has been very important in yesteryear. So you have to have access to those financial resources. And of course, the talent pool of those trained in science, technology, engineering, and mathematics, we need to continue to support that as well. But critical to all of that, we cannot, as scientists and engineers and technologists and mathematicians, continue to work in isolation. Now, that's a broad generalization, and we're not doing that. There's great evidence and examples of us coming together. We have to redefine interdisciplinary studies for not just within our disciplines within the scientific fields or the technology fields, but also bridge across to other types of disciplines as well. This can happen at the university level when you bridge the scientific disciplines with the humanities, but it also needs to happen right here, right now at this table, where we bring the different contexts, where we're coming from, what are our limits. You have to understand what our limits are, and we have to understand what your limiting steps are. So this interdisciplinary collaboration to the very core, we need to boil it down to the very core and have more opportunities to be able to learn from each other.
Just adding to that, then I think when there needs to be a consensus is the wrong word there, but there needs to be a collaboration, as you said, between legal, regulatory, government, industry, technology, all coming together.
Mm-hmm.
I think that kind of a forum needs to have sponsorship like yours with the $20 million plus funding around it to trigger some of those questions that we're all asking. Right? Well, the first part is to trigger the conversation. The second part is, okay, now what do I do with the questions that have been asked? Right? So let's figure out what are the threads or the tracks of work we want to launch from that. And then how do we assign accountability for those threads so that we're getting something out of it soon? Right? Government does it very well in a number of areas. So let's start to tackle it from a very methodical approach towards that. Right? Because I think we need some kind of a sponsorship that is forcing this conversation to happen, in addition to accountability for the outcomes of that conversation to happen. I think those are the two things that would benefit extensively.
Yeah, very good.
I think that's very well said. I couldn't add anything more. It makes sense, right?
Yeah.
It just makes sense.
Yeah.
And not just for our technology here, but for every other technology that's coming after nano.
So it's got to be incubated, and there's got to be a catalyst to incubate this notion, and it seems to make sense that the government would be.
So, but the insurance community has a lot more to do. We need to figure out better ways to get data, perhaps through our ongoing underwriting process. Perhaps we should be talking to those parties that help us get the data. We have to look at coverages, and as we learn more, ask ourselves, what does the coverage that we have today meet the needs of today and tomorrow? One of my favorite examples is actually intangible property in a general liability policy, which perhaps when I started in this industry, nobody really cared about, frankly. And that, what would fall into that category today would be all things on the internet.
Yeah.
Okay.
Yeah.
Which seems to have become quite a valuable
Yes, yes, it has.
thing. So the question that when I was first exposed to this, and I said there's no nano exclusions, I thought, what do I care? But then when I started asking myself either size of risk and therefore how they buy, what the implications are, and or the legal landscape of the United States with absolutely different laws in every state as relates to manifestation of liability. And for the attorneys listening, I'm sure this is is there, the biggest opportunity in modern history potentially upon us, as evidenced to some extent by the not insured but one and only big nano claim, which would be the Johnson & Johnson Stryker claim, which is estimated to be well over $4 billion in claim. I assure you that particular claim, if it had been insured, would capture very quickly the insurance community's attention.
It would be the catalyst.
Yeah.
So do you think that nanotechnology could be a model for how insurance companies do deal with uncertainty and risk?
Yeah, certainly, I think. So, again, innovation doesn't happen kind of like in a single event, right? It's a phased thing, right? So the first thing that happens is, hey, you have a discovery of a new insight. So nano is a good way to think about, hey, I figured out a way to minimalize something that's big to very small, and it's very powerful. The second phase of that is now you need to engineer solutions around it, right? And that's the phase I think we're in with nano. We have some consumer grade stuff, some commercial grade stuff, but it's still kind of in the inception phase. And then the third part is now you're transforming the industry, right? So we're kind of in the between the first and the second one, more towards the first one than the second phase of it. So we're in the right place and the right time to actually have this conversation, but we have to be sensitive to the fact that innovation is accelerating everything else. Right? So we cannot be waiting that, like we did in the decades past, that, hey, well, let's take it slow, let's let the studies happen, we'll kind of slow it down, we'll take another decade to kind of figure it out. I don't think that won't work well for us. So as we think about innovation that's happening in other industries, let's take examples of that. Let's adopt them to nano and use nano as the catalyst for this insurance, technology, material science, EHS type collaboration, and focus a lot of attention into it. That would be my answer.
I mean, I can imagine that my first roommate in the insurance industry was an actuary, very exciting person, and he really was a good person, but he obviously very focused on math. But that model that has existed for the insurance industry, I think, will benefit from this theme of convergence, where we may be able to accelerate that process substantially using technology. And if I was a young person today, I might be thinking about that interface as a tremendous opportunity. Actuarial science and information, and see that overlap, and I might be thinking that there's quite an interesting future there.
Absolutely.
That may literally completely change the ability of insurance and how it operates.
But I think the opportunity on the table, obviously, that we've talked about is the fact that we're always going to be taxed and challenged by the pace of technical innovation. We're always going to be taxed by that. And as you well said, it's increasing. It will continue to increase. It will not decrease. We won't have the luxury of time. So getting it right and engineering a model now allows you to leverage that and refine that over time across all types of different technical domains, right? It doesn't have to be nano.
And it's transformational because it's not just for large data sets or big data, but as you said before, it's even for smaller data sets, little data. So it doesn't matter what particular field we're talking about. These solutions that we need are not just for big data, but it's for smaller sets of data to make sure those industries are sustainable as well.
So I think we're at the 60-minute mark. I'd like to thank Christie and Alan, and Madhu and David for participating in this discussion. I thought it was a really, really great discussion. I want to again thank Lockton Companies for hosting this.
Thank you.
Thank you.
We certainly appreciate that. I want to thank those of you that are listening for tuning in. I also want to point out that that we will be archiving this webinar as we have with the other ones, and it will we'll add captioning to it, and it takes about a week or so to get that done. So I would look for it in the next couple of weeks, and please pass on the fact that we've had this webinar to your colleagues who you think might be interested. So thanks very much.
Thank you.
Thank you.